Hey everyone, we got some great news for Taiwan Semiconductor Manufacturing Company stock investors as the company reported sales for the month of July that exceeded expectations. I'll share with you precisely what those revenue numbers were and what it could mean for Taiwan Semiconductor investors going forward. Hey everyone, I wanted to take a moment to thank the sponsor of this video. Moomoo is a trading platform that allows individuals to buy and sell stocks and other investments. I posted the link to Moomoo in the description below. If you use that link to sign up to Moomoo, it'll help support my channel, but more importantly, you can get special incentives for using my link, including up to extra 10 free stocks. Alright, the company reported revenue for July 2024 was approximately 256.95 billion NT. That's an increase of 23.6% from June and an increase of 44.7% from July of 2023. So a year-over-year increase of 44.7%. Of course, Taiwan Semiconductor is benefiting from the rising effectiveness of artificial intelligence. It's a supplier to some of the largest companies in the world, including NVIDIA, AMD, and of course, Apple in the smartphone market. The company reported sales in the first 6 months of 2024 that was also up. And if you think about the year-over-year revenue growth, it's faster than the company grew in its latest quarterly report. You can see when Taiwan Semiconductor reported their second quarter results on July 18th, year-over-year second quarter revenue increased by 40%. So if you go from 40% and you look at the new number of an increase of 44.7%, you'll notice that Taiwan Semiconductor's revenue growth is accelerating. That's great news for a company that's so profitable on the bottom line that when you have this kind of revenue growth, it leads to meaningful expansion in profitability on the bottom line. Speaking of profitability, look at Taiwan Semiconductor's operating profit margin over the last decade and how it's been increasing. The latest figure came in at 41.98%. That's up from around 38% in the same time in 2015. An operating profit margin of 42% is excellent, and I wouldn't be surprised if this number continues increasing over the next 3 to 5 years as rising effectiveness of AI really boosts demand for Taiwan Semiconductor Manufacturing's products. Now, the company is not just in the AI market, it's also a major player in the smartphone market. As I mentioned, it's a big supplier to Apple, and Apple recently reported iPhone sales that were much better than expected as well. Apple also launching enhancements to its iPhones with artificial intelligence, and that should create a boost in demand for iPhones as people have been waiting for those advancements before they upgrade their phones that they bought in 2020 and 2021 when consumers' balance sheet were much stronger. They had government checks, they had stimulus money. All of that helped fuel demand for smartphones, and smartphone sales have been slow ever since that burst in 2020 and 2021. So that replacement cycle will fuel further demand for Taiwan Semiconductor's manufacturing. And that's not even yet speaking about how Taiwan Semiconductor is benefiting right in line with NVIDIA. NVIDIA has been one of the fastest growing AI companies in the market. Taiwan Semiconductor is the supplier of NVIDIA. NVIDIA outsources manufacturing to Taiwan Semiconductor, and so as NVIDIA continues to thrive, which all expectations point to NVIDIA's revenue growth sustaining at these high levels for at least another 24 months, Taiwan Semiconductor stands to benefit. Of course, you can't talk about Taiwan Semiconductor manufacturing without highlighting the geopolitical risk that's been evident in the company's stock price for at least the last several years as tensions between the US and China and Taiwan have escalated. That's been bringing down the company's valuation, and Taiwan Semiconductor is trading at a forward price to earnings of just 20. A company with this performance at these margins with this type of excellent forward prospects would be trading at a much higher valuation if it was a US based company. The forward PE I mean, this is speculation on my part, but the forward PE would be upwards of 30, maybe 35 if this was a US based company. Whereas because it's in Taiwan and because of those geopolitical tensions, it's trading at a depressed valuation. Still, I think even with the geopolitical risks, the company's performance is so excellent that it makes a worthwhile investment for long-term buyers, even with the geopolitical risks incorporated into the decision of this investment. So overall, this was great news for Taiwan semiconductor manufacturing stock investors. Before I let you go, don't forget to click on the link below to get your free 15 stocks at Moomoo. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.